Like
It's nuts,
what?
man.
What? S&P up 3%?
Hey, man, I don't know what to say. You can't fight the Fed. I guess
Can't
that's
fight the
pretty much
Fed.
it.
Dude, this move is disgusting.
The conclusion I've come to is don't fight the Fed.
Wow.
Oh man, this is some crazy stuff. It's a cool time to be trading though. Like, man, how could you ever predict this? It's nuts. It's
Right?
absolutely nuts. I don't even know what to say. But hey, look, Jordan, let's get talking here, man. It's Friday, so I thought we'd keep it a little lighter. Usually, we're a little bit behind schedule here, so I hope we still get a good turnout. But usually I'd be doing a trade breakdown today, but we did this a few times last week, and I thought it was a really good conversation where we sort of just come on and talk about trading, because we've had a pretty cool journey in the trading game. And I think a lot of people could get something from it, because, a lot of what we talk about is just the realities of what it takes to make money trading, right? Nothing too crazy. We don't need to overcomplicate things. Yeah, let's hop into it, Jordan. Just give me 1 second here to.
It's just amazing to see what's happening. Oil's pumping, S&P's pumping, USD CAD's falling. It's like it's really coming off today. Vols, I think VIX is actually keeping a bid. Let me take a quick look. Yeah, let's see a quick look here. I think it's still let's see. It came off almost 6% right now. So, it's things are really going back to normal. Market's saying things are going back to normal, which is pretty insane.
Yeah, I have no idea how that's happening, man.
But remember, like market's future looking, so we might not be able to see it now, but maybe in the future we're going to be all right.
Yeah, maybe the market's wrong too.
Yeah, exactly. Maybe the market is wrong.
Right, and that means there'd be an even harder fall. But we'll see. Like, it's so hard to tell. Like, in the end of the day, all we can do is try to play with an edge. No one's going to get it right 100% of the time. And I think that's one of the biggest mistakes people make, is they put themselves in a position where, in order for them to win, they need to be 100% right. You know what I mean? Like, they'll put their entire bankroll into like one stock, and it's like, if this thing hits, I'm rich. If it doesn't, I'm poor.
Right.
It's either soup kitchen or caviar.
Right.
Right?
Yeah.
Why are you putting yourself in this position? And what you'll see is, like, you have a really good saying, play tight to the vest, find an arb, go all in. Right? And I think that's the way it should be. Like, don't be going all in on something that should just be a trade. Right? Take your view on something, but don't bet your bankroll on it. It's one of the biggest mistakes people make.
Yeah, you have to live to see another day. If you look at like the professional space, a lot, like even on the sell side, a lot of it is just like, doing orders for other clients, right? There, a lot of trading is really trying to find areas where, you're always going to make some money, right? Mm-hmm. So if you're on the sell side and you have a client come in, you're going to trade on behalf of that client. You're going to take some money. If you're a market maker, you're going to collect the bid-ask spread, right? Even as traders, I always like to try to find opportunities where it's almost an ARB. So you don't really find ARBs anymore these days, but you find almost ARBs. So I call them quasi ARBs. It's like, for example, a real ARB is like selling Bitcoin on one exchange and for a high price and be able to buy it on for a low price on a different exchange and capturing that ARB. And like those areas do happen. I mean, that was happening in 2017.
Mm-hmm. On the Bitcoin exchanges.
It was happening, I think, even in 2018. So, it's as new inefficiencies come out in different markets, you got to be able to find these markets and be able to capture some alpha there.
100%, man. No, I think that's really cool. Like, did Bala know about that? We have a guy in our that we talked to who's pretty passionate about Bitcoin.
I'm not too sure. Is he on
that ARB?
I'm not too sure, but it was definitely tough to come across. I mean, one thing about trading is that usually edges are really hard to not only find but also maintain. So I remember there was a guy that was talking about this when he was doing the Bitcoin ARB. no banks wanted to give him funding. Like, I'm sorry, no banks wanted to do wire transfers with him,
Mm-hmm.
right? Because they're like, well, what the hell is this currency? So he was having a hard time, setting up the infrastructure to actually capitalize on the arb.
Oh man.
Yeah, and a lot of trading is about having the right infrastructure and going through the hoops and the loops to try to
Yeah,
find
man. It's,
find an edge.
and that's something I've noticed. Like, man, the gap between professional traders and the average person is so big.
It's huge. It's
It's
huge.
so big. Like, and it's not just like I don't know what it is. Like a lot of people, they look at what professional traders do and they think that they shouldn't be doing that. That the game that the retail person should play is different than the game that the professional should play, even though we're both sitting at the table together.
Mm-hmm.
And it's like, why would that be the case? Like, sure, there's certain things, like, for example, big funds have, a lower risk tolerance than a lot of people. They can't afford to take on as much risk. They're trading with more capital, so they have these certain constraints that, that make them different than us. But at the same time, it's like, in the end of the day, we're all looking for an edge,
The
right?
philosophy is the same.
The philosophy is the same. Exactly. And I think that it's almost like taboo to want to trade like them, because I think a couple of reasons why. One, the reasons that I just listed, and then two, because who wants to make 20% a year, 30% a year? Nobody comes into this game wanting to make, not that much money. But then in the end of the day, talk to someone who's been trading for 5 years, right? What do they end up coming out with? Right?
Mm-hmm.
Show me the guy who's 10 years into the game making 250% a year. Right? They exist. Don't get me wrong, they exist, but it's not something that you can follow a 1-2-3 system and you're going to make 250% a year. Because what happens is, like, there's a logical reason why that happens. Actually, if there was an easy way to make a ton of money in the market and you knew about it and someone else found out about it, they would instantly start doing it. And then another person finds out about it and starts doing it. And eventually enough people find out about this, or one guy with enough money finds out about it and takes away the edge. The edge vanishes. The more people capturing that edge, the less edge there is. So why should there exist an easy way to make 200% a year in the market? How would it exist? Like, think about it like this. If you had a business idea, right, and this business idea gave you what was exploding, you came out with an app that made tons of money. How quickly do you think copycat apps pop up? And all of a sudden you see your growth start to diminish because now there's more options, right? The only way that a business like that becomes sustainable is if you have a competitive advantage that's hard to replicate, right? Maybe you have some form of a deal with the government, or like some sort of monopoly. Maybe you have proprietary information, right? So you see this with drug companies a lot. They come out with a drug that cures something and they patent the drug. And for 20 years, they are the only providers of that drug, right? And the drug is super expensive. And then you see it instantly. After that 20 years is up, all these no-name versions come out and the price of the drug drops like crazy, right? So think about it like that when you're looking at your trading. Why should I have this edge? What is my advantage over the person who's probably on the other side of my trade? Why should I be making money here? If you can't answer that question and you can't actually prove the idea you're doing makes money, it probably doesn't. It might make money today or on an individual trade, but the odds of that idea making money in the long run, how do you know? And is that something you really want to be putting your money behind? Right. And that brings me to something that I really wanted to talk to you about today, Jordan, which is critical thinking in trading. Right. And I've been really trying to iron out this idea of, like, what is the missing link right now for traders? Because, all you have to do is spend an hour talking to a professional trader in an open, honest conversation to really start getting the gears turning about, like, am I doing this the right way? What do I need to be doing here? Right. And I think that was a huge game changer for us, was having those resources in our life to talk to make that change for ourselves. So I wanted to ask you what your thoughts are on critical thinking and trading, the state of the, retail trading community, and what can be done about it.
Yeah, I think the big thing, the big difference is that a retail trader is always trying to forecast, right? They're trying to forecast the price of something. And in the professional space, a lot of the time we're trying to play relative value. We are trying to do relative value stuff. So we don't necessarily say, like, well, what's Apple going to be tomorrow? we would say, well, what's Apple relative to Amazon, right? Is there an inefficiency there, right? If we see that, Amazon and Apple always move like this together,
Yeah.
right? And then all of a sudden it's up here, well, now there's a spread, right? So we can capture that spread. I remember I was talking to someone at RBC and I was saying like, we're talking about implied volatility, and I mentioned like selling high implied volatility, and he looked at me, he's like, that's gambling. That sounds like gambling to me. Because in his sense, he wouldn't just be selling high implied volatility like that, right? What he would want to be doing is selling high implied vol on, let's say, Apple, and then buying it on Amazon,
Yeah.
trying to capture that spread, right? A lot of the professional traders don't really want to, if they don't have to, they don't want to be forecasting. If that makes sense. They want to be trading relative value stuff, right? And that's one of the biggest things that I've noticed between professional trading and retail trading. Bless you.
Thank you. I was courteous enough to mute the mic there, so hopefully didn't destroy anyone's ears there.
I actually really wanted to just quickly touch on the subject that you were mentioning there about someone has to be, if you're making 200% a year, that's coming out of someone's pocket, right? And for someone to be making that kind of mistake, so I remember I was doing a trade where it was an unsophisticated market maker that was just watching this one product, and like during that period of time, I pulled in $80,000 from this guy, right? And then eventually he realized that, you know what, I'm losing. Like obviously he's going to check his sheet every month, every day, and I'm losing money here, and then so he readjusted. So it's not gone. Like exactly. So it's not like a systematic strategy is going to be able to last forever, or even a long period of time, because eventually, like that money's coming out of this person's pocket, and they're eventually, assuming the market is usually pretty sophisticated, they are going to notice that, right? So that's why an edge that's systematic, that is has high capacity, is not going to last at all. It's going to be gone very quickly. So
no, that makes a lot of
always
sense.
have to think about that.
Yeah, no, that makes a ton of sense. And that's honestly why like I preach the same message over and over to traders. Like I never say like just find your system, find the way that you like to trade, and then stick with that. I always say become versatile, master the product you trade, learn what's tradable information, learn how to test ideas, find ways to find edges. Don't just find one thing that you like and stick with that. Learn everything, because the more you know, the more versatile you are as a trader. And when you have that degree of that ability to change and that ability to evaluate things, now you're not tied to one idea. You're no longer trading on faith. You have confidence to move forward. That's why I always say, like, put your emphasis on education, right? Someone tells you something, go look it up and go try and prove it or disprove it. Always look to be critical of the ideas you have. And that's where like you'll grow, right? It's going to take time. It's going to take a lot of work, but it's the work that you need to put into winning this game, right? And that's why I always say, like, if you don't love this game, it's probably not going to work out, because it's not easy. It's not 1, 2, 3 it happens. Lots of money to be made, a lot of fun. It's super competitive, but it's not easy. Any game that's competitive isn't easy, because now it's no longer about like passing a test. Now you have to be better than the other person, right? And I think that's what makes it challenging, but that's also what makes it a lot of fun. You know what I mean?
Mm-hmm. Yep, I think that's actually a really good way to say it, man.
Right? Like you look at a game like checkers, right? Checkers is like, you just fucking move these little pieces around a board. Not hard to understand the game. You learn the rules like that. I was playing checkers when I was like 5 years old. You know what I mean? But have you ever played someone who's really good at checkers? I know you're really good at checkers, but
I'm actually not very good at checkers. Actually, I don't think I've played that since I was like 10.
I know, exactly, right? But you get my point. Like, there are people who are really good at this game.
Yeah.
And depending on the person you play, now you got to step up more, right? And then, so the whole point I'm saying is, like, it's not just enough to, like, oh, I get what's happening here. Okay, I can play this game. You got to be like, how the hell do I win? You know what I mean? Oh, shit, this guy on the other side, I don't even, like, it's just an anonymous thing. That could be an insider.
Mm-hmm.
Or it could be a Robinhood trader. I don't know who it is, but all I know is for sure I got to step up my damn game if I'm going to win.
Yep.
That's why I always say, like, put an emphasis on your education, right? Like, I can't stress it enough. I think one of the biggest differences between the average trader and a professional trader is just thoroughly understanding the product you trade.
100%.
Like
100%.
price sensitivity, caring about the value of things rather than the gamble. You know what I mean?
Yeah.
And like, don't forget this, guys. Like, when you look online, like, it was a mistake I made. People will find all sorts of reasons to justify their gamble, right? The market maker's against me. It's all fixed. This is they're squeezing out
Manipulation.
short hands here.
Yeah.
Manipulation. Like, dude, first
They're
of all,
bringing it down. They're bringing it down.
they're bringing it down. The weak hands are getting out here.
Oh man.
Who the hell gave you this idea? Or is this just a rationalization of why the hell is this happening to me? Is that just someone's way of making sense of a situation they can't make sense of? Because there's no evidence to support it, right? There's no, what the hell are you saying, man?
Mm-hmm.
But then it makes sense. Then you're like, okay, the dude's losing a lot of money.
Mm-hmm. It was
And
like,
it sucks.
it's like, when I first started out with trading, like this is a huge misconception. I see it almost everywhere. The market makers are against you, right? And of course, I believe that as well when I first started. Oh, they're probably manipulating the price to try to get me at a better price. And the actual fact is, market makers are not against you. If they have a job, they provide you the liquidity. If it wasn't for them, you wouldn't have any liquidity. So, we a lot of the misconceptions that are out there that are like basically grandfathered in, a lot of them are just, they're hocus pocus. It's not a real thing that actually happens in the markets.
Yeah, like the markets, we're all playing the game to the best of our ability, including, everyone, and they have different goals, different reasons for being there. And you need to understand those reasons to really understand why they're there, right? The market maker, it just sounds like a scary word. The market makers, it's like saying the Illuminati.
Yeah.
You know what I mean? I swear to God,
Yeah.
people think market makers and Illuminati are the exact same thing.
Mm-hmm.
I guarantee you, well, you just look at the way people talk about it. It's the same thing.
Mm-hmm.
They're fixing it. It's manipulation. One day it'll have to come back because they can only manipulate for so long. They're just squeezing out the weak hands right now. Dude, what the hell are you talking about? Everything good?
Yeah.
Perfect. So I want to talk about another thing, right? Like evidence-based trading.
Love it.
Right? I love it too. I think it was the biggest game changer for us. And this ties into everything we've talked about today. So, like, guys, like when we go through these concepts, like, we're just having a conversation about trading, but they're all sort of related, right? Like, we talk about critical thinking. We talk about understanding who's on the other side of your trade. All of this comes down to using some form of evidence before you put your money behind an idea. Can you actually validate the claim, right? Everyone can make a claim about anything. I can say that when Mercury's in retrograde, the S&P has more down days than up days. First of all, like, a couple things. And this is what evidence-based trading is all about. It's like, can you prove that? Right? Let's go back and see, like, does this happen? And then second of all, does it make sense? Should this happen? Can we explain why this happens? Because, it's not enough to just see a pattern in data, right? And I think this is where people get confused. They think like, oh, I see a pattern within some numbers, I'm going to trade it. It's like, no, it has to make sense as well. There has to be a logical reason why, right? So for example, if you look at the last rally in the S&P, all of the gains came from overnight. So in the market closed hours, that's when the S&P really made its leaps and bounds in this recovery. But there's a logical reason why that happens. You know what I mean? That's when, like, there's the risk premium, right?
Yep.
That's when the big moves happen. So, holding overnight paid a lot of money because that's where the risk was. So we can understand that. And now we can build a strategy and say, okay, let's not even touch it during the day. Let's buy it at market close and sell it at market open.
Yeah.
Now we see, like, that's where the gains are made. We understand why the gains are made there, right? There's a risk premium for holding it during that time. That's not there during the day, right? You can't get out at night. So we can build a strategy around that, right? Yep. Then we test it over a long period of time. We look at our drawdowns. We evaluate the whole strategy and we say, do we want to put our money into this? Right? And that's the approach that people need to be taking when they're looking at trades. right? If we bring that back to the option space, it's all about finding factors, understanding why things are the way they are, right? And then being able to find an edge and then use options to structure a trade to capture it. It's not about buy a put if you think it's going down, buy a call if you think it's going up. That's like level 0 thinking. It's not the game.
Yep, I 100% agree. I mean, like, people forget that when you're buying that put, someone's selling it to you. Someone has the opposite view as you, and you got to be a lot smarter than that person. If you want to make 200% a year, right, you got to be really smart. You got to really outsmart the other guys on the other side of your trades.
100%, right? And like, look, I need to touch on one more thing. Look, a lot of people are here looking for a gamble, and that's okay. If you're looking for a gamble, it's okay. But if you think that you're going to gamble and get rich, we got an issue.
Yeah.
Right? We got an issue there because, that's like the guy sitting at the roulette table thinking he's going to get rich. It should be for fun. You shouldn't have your mortgage riding on it.
Or future ideas. You shouldn't be thinking about the house you're going to buy or the car you're going to get. I think that's actually a big thing that happens. It happened to me at least, trying to ride on your future potentials. Like you have let's say a $500 day, and it's like the things I'm going to get now, the things I finally made it, the things I'm going to get in the future. And then it doesn't happen. That can give you some huge swings in regard to trading. So, I think we really need to keep that in mind. And also, guys, I want to touch on quickly a big difference between retail traders and professionals is a lot of the time, professional traders are trying to find inefficiencies, right? When a retail trader is not really trying to find an inefficiency, right? So I think that's a huge difference there between retail and professional. Sean, do we have any questions in the box?
Let me take a look here. My dog just came outside. She's barking away over there. No, we don't have any questions, but we have some good points, right? Like, Raf saying professional traders know how to sell and make profit. It's a patience game. So I think that's a part of it, but like, it's one of those things. It's like the game's always been easy. It's always been buy low, sell high, buy cheap, sell expensive. It's never been anything different than that. But it's like, in order to do that, you need to know what's cheap and what's expensive. And I think that's where people get confused. It's like the stock's gone down. It can't possibly go any lower. It's got to be the bottom. You have no idea what the value of this thing is, right? You need to be able to forecast and say, like, what is this thing going to be worth in the future? Is this a fair value given what's going to be happening in the near future or medium term? And until you can do that, you have no idea. You might think you have an idea, but do you? And that's one of the things that, like, I always come back to the education, right? In the option space, the education is there. We just need to stop looking for an easy way out.
Yeah.
Right. It's like, people are so flooded with the successes on social media that they sit there and look for the way to just get to that.
Exactly.
You know what I mean?
Yeah, exactly. Well said.
My dog's driving me crazy, man.
Oh, that's okay.
Yeah, is she loud? I don't know, guys.
Yeah, so maybe we can even talk a little bit about some types of trades we like to do during these during these type of environments where vol is just where the S&P is just moving up like crazy. And what do you think about that, Sean? You want to talk a little about trade ideas?
Yeah, sure, man. Let's have a conversation about that.
Yeah. So if we look, like, for example, here's just some examples of how we can think about it, right? So right now we have the S&P moving to all-time highs. We got calls. The call skew is very low. So, out of the money calls are super cheap and out of the money puts are super expensive.
Mm-hmm.
Right. So can we find a strategy there where maybe we sell some of those super expensive puts, buy some of those super cheap calls, right? And then maybe short some stock against it. Right. So these are the type of things that, as traders, we have to start looking for, is like these inefficiencies that are happening in the market.
Yeah. And what are you looking to capture there?
We're just looking to capture the people buying that, spending a lot of money on those out of the money puts for a few reasons. Right? Like the reasons can be, stocks moving down, stocks are going up. People are saying, oh, you know what? Like stocks are going to come back down. So let me buy some out of the money puts. Right. And then on the call side, they're maybe like saying, okay, you know what? I'm going to protect myself here and sell some out of the money calls. I mean, I was talking to, one of my old professors yesterday, and he was saying how he's looking for a structure where he can sell out of the money calls and buy out of the money puts. And it's like everyone's doing that. So that's driving up the skew.
Okay, yeah, and that's how you're getting, because yeah, and I think that's what people forget about skew. It's like it's not just about like where people are buying; it's also where people are selling.
Exactly.
Right? So if there's a huge, it's economics, right? Supply and demand. Where is there an overabundance of supply and not much demand? You're going to get a dip. It's going to be cheap. And where you have a huge demand and not a lot of supply, it's going to be expensive.
Exactly.
Right. Like a lot of these things, they like, and this is, I always come back to it. Everything has a logical explanation. There's a logical explanation for everything.
Yeah, exactly. So yeah, like, do you guys have any questions? Do you have anything you guys want to talk about here that we can discuss?
Let's have a look here. I'm not seeing any questions right now, but that's okay. We got a decent little viewer count here, guys. If you're new to the channel, today we just talked about some of the things we see in the retail space. What does it take to be a profitable trader, guys? Like that's really, in the end of the day, it's a game of can we make money? That's really all we focus on.
Absolutely. And it's definitely a tough game, man. You can't. It's definitely a tough game, right? You're always playing against some pretty smart minds out there.
But you know what? Let's end this off on a positive note here, right, guys? Like, look, if you learn the right things, if you learn about your product, if you master how to trade options, you can make a lot of money. You make a lot of money. You can actually find an edge, and like you can have a lot of fun doing it too, guys. Like this is a sick game. This game's so much fun, but it's not fun. Well, it is fun when you're flying by the seat of your pants, but it's a lot more fun when you know what you're doing, and not when you think you know what you're doing, but when you like really know, when you like thoroughly understand what's going on. Mm-hmm. Because then the way you play the game changes completely. It goes from I need this to work out to I'm just playing my edge. I'm playing my edge out. Right? I'm always looking for inefficiencies. Right? I'm looking for arbs. I'm looking for ways to make a lot of money. Right? And knowing what to look for. And you can actually spend like the amount of time we spend doing research versus the amount of time we spend doing trading is like 99-1. Placing the trades is easy. It's finding the trade that's hard. Right? And like, something to think about, guys. Like when you see something that seems so blatant on a chart, when we look at a trade and we see that, it's hitting this support line, why should that work? Right? If everyone's seeing it, and everyone wants to be, buying, who's selling? Right? Trading takes place in a market. There's someone on the other side of your trade. And one of the biggest mistakes that I made in my early days of trading was thinking that there's just some stupid person offline who doesn't know what they're doing that just always gets it wrong. And, they don't care and they're just offline somewhere. But then it took me a while to realize that like the people who I want to be betting against are actually the majority of people I'm finding online. The reality of it, right? Like, think about it. We're looking for the retail traders and they've built forums around themselves. We can just go on StockTwits, right?
I think we did a post the other day where we just were fading a couple of the guys on StockTwits and did reasonably well. Like I got out of GNUS at $7 yesterday. I don't know if I told you, Sean.
Oh, you got out?
Yeah. So got to scalp the buck there, and then if I actually took the signal at the right time, when he posted, it would have been 250. So we can actually and then I close out EROS as well for a profit. So we can actually both of them. So both of them worked out, and so we are 3 for 3 just off this one guy's signal, right? We did STNG, EROS, and what was the other one? GNUS. 3 for 3. Yeah. We haven't had one losing trade yet. We have like a sharp of like 3 or 4. So it's pretty exciting.
Hey, well, we got a couple questions here, and then we're gonna wrap it up. All right. So, guys, if you have any more questions, we're gonna go through them, and then we're gonna wrap it up. We'll be back again on Monday for more lives.
Yeah.
So, Raf is asking if a skew if it's a high number, does that mean the vol is higher?
No, that doesn't necessarily mean the vol is higher.
Okay, yeah. So skew like real estate Raf, like skew's a pretty complex topic. Ask some questions in the group about it. There's a few guys that are pretty into skew.
Yeah.
Drop it in the traders chat. T-Bone saying that mechanical trading is his thing for futures.
That's awesome. I mean, like if you're doing mechanical trading, that means you must have back tested it, because anything mechanical can be back tested. So you must have back tested it. You must have seen a nice equity curve. You must have tested it in sample, out of sample, right? I'm sure you did all of that. And then you said, you know what? I understand why this makes money. And now you're systematically trading it. That's the way a lot of professionals go about doing it.
Yeah, good for you.
Yeah. And also I just want to mention like back testing is like putting it through a computer. So not like subjectively going back and being like, oh, it worked here, it worked there, it worked there, it worked here, it didn't work there. It's like actually going back and doing it with a computer.
That's actually something that I quickly want to touch on. One of the biggest, so whenever we talk about, quantitative trading, people automatically jump to things like, AI or machine learning or algos. Algos is the word that everyone likes to use when we talk about quantitative trading. But guys, the reality of quantitative trading is just simply applying numbers to ideas. Can we prove the idea that we're talking about? And when we define it in that way, what we kind of realize is everyone's doing some form of it. Even the technicians are using data of some sort. The only real difference is they're doing it in their head. So the computer that they're using to process the millions of data points is their own mind, which is, simply put, a worse way of doing it than using a computer. Why would you want to be having all that processing power in your mind, spending your time, drawing out a back test or visualizing patterns, trying to understand what it's telling you about the future, when you can take your ideas, define them, and put them into a computer? And the computer can tell you, how's this done in the last 20 years, like that? Right? And then the computer can help you go, let's say you wanted to do a swing strategy and you had a couple factors you look at. The technician looking at these factors would go stock by stock evaluating them. Whereas the quant would be able to use a scanner to filter for those things and look at 9,000 equities at once and pull the top 10. So what happens is the game becomes a totally different thing. You go from having to spend your time doing manual labor to spending your time finding new edges, testing new ideas. And that's how you stay ahead of the curve. And that's why when you look at the changes from subjective to evidence-driven trading, as this change happens, you see a move towards the use of computers, not necessarily for algos or for AI or for any of this stuff, but really simply for the processing power that comes with being able to use a computer. It's the biggest game changer. People forget that. They're processing the data in their mind right now. Use a computer. Game changing.
It is, definitely.
So we got a couple more questions here.
We'll wrap it up.
Yeah. So Scorpion HKS is asking, what option strategy has worked best for you in recent times?
It's a great question. So I do a lot of earnings trading. That's a big breadwinner for me. And then there's a few other strategies that I do that I can't really talk about. But the earnings is a very good one. And anyone can start doing that, and that's just selling vol around earnings.
Yeah, being able to filter for the right opportunities to sell vol, that's another one, right? Like for example, like selling vol is a profitable strategy. That's something that you'll hear a lot, right? The risk premium is worth collecting. You'll have a few big hits, but it comes out profitable. And what you end up finding when you actually test that is it's not profitable. The big hits outweigh your many, many small gains until you start applying filters, right? So you need to be able to filter out the really bad apples. Once you can do that, now you're left with a batch that comes out pretty profitable in the end.
And I just want to clarify, maybe why I can't talk about some of the strats is because, as we mentioned before, they're capacity constrained. So if I tell you about it, then you'll be able to take advantage of it, and then someone else takes advantage of it, and then it starts to disappear. So with something like earnings, though, for example, it's not as capacity constrained, and to be honest, people can't actually do it, even if they wanted to. I mean, selling vol around earnings, you're gonna have some serious swings, and a lot of people can't deal with it.
Mm-hmm. Yeah, it's not an easy game.
Yeah.
Our buddy T-Bone21 is saying math is his thing, and he taught himself coding. Welcome to the gang, man.
Welcome.
That's
what
it is. Hey, T-Bone, if you don't mind, can you type a little sentence or two about why you did all that?
Yeah, that'd be interesting.
That'd be interesting, because we took a similar road, and you know, I don't know if we want to get into it too deep right now, but maybe on our next live, we'll break down for you like our actual story of our trading journey, like from, you know, realistically losing all our money to now being 25, managing a pretty sizable amount of money, doing about 70% year over year, winning the biggest options competition in Canada. No, I'd be interested to know where your journey started, where it took you.
Yeah, it would be pretty cool.
Yeah, I'd love to talk about that.
All right, dude.
What'd you say?
Any more questions? Otherwise, we'll wrap this up here.
Yeah, one more here. So Raf is asking, how do you understand if the option is cheap or expensive?
That's a pretty in-depth discussion. That we can talk about in later videos.
Okay, perfect. Yeah, it gets a little
yeah. Raf, we'll talk about that in our Discord group. Okay.
And then Raf's got we got a couple more here. He's like Scorpion's asking, can you talk about what source and tools you use for backtesting?
Sure. We can definitely talk about that. I use QuantStrat. So QuantStrat's my go-to platform for backtesting. It's a program in R. It lets you basically pull in a data frame, put that into the code. Code will run the backtest, and there you go.
Perfect.
Yeah.
And then Raf, or let's see here, we got one more question. Raf's just saying, how long have we been doing options? You know, just options, not like stocks, futures trading.
So about 4 or 5 years, Raf. Oh, Chloe. Okay. Guys, we're gonna end it off there. Sean, any last words? We'll end it off there.
This is the thing that was making all the noise in the background, guys. Like, say hi.
All right.
Okay, guys. We're gonna take it easy there.
Yeah.
All right. Thanks everyone for tuning in. And if you guys haven't, drop a subscribe. We do this every morning, 10:30 a.m. A lot of the time, I'm actually doing trade breakdowns as well. So if you have any trade ideas you want to bring to the table, we built out our own options terminal, and we use that to help people break down trades.
Awesome.
Okay, guys.
All right, guys. See ya.